Hey guys, it's Cody. Today we're going to be talking a little bit about the potential upcoming recession and how this is going to affect your decision of whether to buy a home, continue renting, or even possibly sell the home that you currently have. My goal here is really to give you enough information that you can take that info and use it to craft a plan that fits your own investing strategy. And while this won't be a one-size-fits-all investing strategy, I do think it will be helpful for you in putting together some information to help you make the best decision moving forward. So let's jump right in, guys. I want to talk first a little bit about why there could be a potential upcoming recession, and then we'll talk a little bit about what this actually means for you. And really, there are a few reasons why experts think that there could be a potential recession on the horizon and what you can do about it. The first thing that's causing a lot of worry on a global scale is the trade war between the United States and China. This is something that's been going on for a while now. Both sides are really not willing to give up very much, and it's becoming a hindrance on the global economy. The other thing is the global economy has actually slowed down in recent years. Even though the US economy has been very strong recently, the actual global economy has slowed down quite a bit. And of course, something that you might have heard about is that the yield curve for the 10-year Treasury note and the 2-year yield has now inverted, which in past history means that a recession could be about 18 to 24 months away. What this means is that the yield on the 10-year Treasury note is actually lower than it is on the 2-year yield, which, to break it down for you guys, simply means that it would be better to loan the US money at a 2-year term instead of a 10-year term. The last time that this happened was in December of 2005, and as you may remember, this was exactly a couple of years before the last recession hit the US. There's also talk about consumer debt being higher than it ever has been in the past, and the biggest worry of that is that student debt is now the largest form of debt with the exception of mortgages. Yes, that means it's even higher than car loan debt and credit card debt. And to be honest, guys, at some point this really just becomes unsustainable. And last but not least, the political unrest in America is not helping the US economy either. So the question that you want answered is, how does this affect me personally, and should I continue to invest in real estate? Should I buy? Should I sell? Should I continue renting? How is this going to affect me as I continue to move forward in my investing strategy? And that's exactly what we're going to talk about. But really quick, guys, if you would just like the video down below, subscribe to the channel if you haven't already done so, and of course, as always, leave a comment below. I'd love to hear from you guys. I'd love to see what your thoughts are on this topic, see if there's anything that you could add to it or anything that you may agree or disagree with. I'd love to hear about it. Let's jump in. Now, it's my belief that regardless of the situation that the economy is in, whether it's booming or we're in a recession, there are at least 3 key habits that you should have and that you should always keep close to you. Now, of course, number 1 is to live below your means. It doesn't make sense to spend more money than you're actually bringing in. If you do that, you're just going to end up in credit card debt, and it's going to be really hard to climb out of that. At that point, compound interest actually starts working against you instead of for you. This means that living frugally and in saving money to be able to invest it at a later date becomes more and more crucial, especially if we are in a recession. During a time of recession is the time that you should go and start investing. That's when everybody else is going to be selling. They're going to be panic selling, and that's when you're typically going to pick up the best deals in the market. You really want to avoid unnecessary fees like credit card interest, bank fees, or even paying more for an item just out of convenience. A really good example of this is paying $3 for a bottle of water because you're out at a gas station or you're at an event or you're at the gym, wherever it may be. It just doesn't make sense to pay $3 for a bottle of water when you can get a whole pack for a couple of bucks. This is something that I've really taken to heart, and I just basically refuse to purchase something when it's just extremely overpriced, except for in rare circumstances. Now, from my philosophy, this isn't something that I want to carry with me forever, but I just can't bring myself to buy something unless I absolutely need it, or until I get to the point where I've got so much money that a couple dollars really won't make a difference to me. Number 2 on the list is to save and continue to build your cash reserves so that you have money to invest when the time is right. You really want to build your savings account by continuing to pay yourself first. You want to take money out of your paycheck or out of your commissions, however you get paid, and you want to put that directly into a high yield savings account. And once you have enough money built up in that, you then want to go and invest it, whether that's into the stock market or into real estate or even something else. Whether it happens in the next couple of years or it happens later on down the road, at some point in time, your life and the economy is going to turn around and you're really going to wish that you had some money in cash reserves to help get you through those rough times. You might end up losing your job, or you might have a large medical expense, and you're really going to be thankful that you've got this money already set aside. The awesome thing about this is that when things do turn around, it's going to be much easier to bounce back if you're not so far into the hole as it is. And number 3 on the list is to continue investing. It has been proven that your time in the market is more profitable than trying to time the market. I definitely recommend investing no matter what you're investing in, whether it's the stock market or it's real estate or it's something else. I recommend continuing to invest whether the economy is booming or we are in a recession. The thing that's important here is that you want to make sure that you're investing wisely. You want to invest in good stocks or good real estate. And if you're investing in real estate specifically, you want to make sure that it's cash flowing heavily so that you can at least cover your expenses if something happens. So let's jump to the juicy part here. Should you buy a home? Should you sell? Should you continue to rent? What is this going to look like for you, and what are my recommendations when it comes to that? I hope you already know what the answer is, and that is to continue investing, continue to buy real estate. Just make sure that it's a good deal before you jump into it. You want to make sure that you've got that monthly cash flow and you've got the potential for some upside, whether it's through sweat equity or appreciation in the market at some later date because of some unique feature with the property. Here's why I believe this is the best choice. Number 1 on the list is interest rates are at all-time lows. Right now, you can get a loan on an investment property. I've seen them as low as 3.25% all the way up to about 4.5%. This is crazy good rates and something that you definitely want to take advantage of. This really makes buying a home easier, and of course, you're going to get additional debt pay down on your loan because more of your money is going towards the principal on the loan instead of going towards interest. Which brings me right into number 2, which of course is paying down the loan. Now, when you're renting, you're not able to do this. You're actually not getting any of that money back. But when you own a property, you're paying down that loan hundreds of dollars every single month, which you'll then capture at some point in the future when you decide to sell the home. As you can imagine, over 5, 10, 15 years, this can be worth tens of thousands of dollars. Number 3 on our list is going to be tax benefits. So you can actually write off what you pay in mortgage interest so that you can bring your taxable income down and pay less in taxes overall. The other cool thing that you can do is what's called a 1031 exchange, where you take the money from that investment property, you sell that home and take that equity and roll it into a bigger property of like kind, and all of that money is tax-free during that process. The other cool thing is that if you're actually living in this property, you can take that money that you're gonna get from selling the home and you can roll it into another home completely tax-free. Number 4 on our list is going to be appreciation. You get to capitalize on the potential appreciation of the market. On average, the market goes up about 2 to 3% every single year. Of course, there's going to be years where it's down or years where it's up even more. But if you look over a long enough span of history, you'll see that it goes up about 3% per year on average. This means that if you bought a $300,000 house today, it could be worth $467,000 in 15 years. This is the exact same reason why you might hear your parents say, hey, I bought this house for $60,000 20 years ago. Now it's worth $250,000. Of course, $60,000 went a lot further that long ago, but when you capitalize on that appreciation over time, you now get to take the benefit of selling that home for $250,000 and you get to use that for your own benefit. Number 5 is cash flow. You have to have cash flow if you're investing in real estate. You don't want to be investing just based off of speculation and potential appreciation. Of course, the appreciation is nice to have later on in the future, but you really want to make sure you've got that positive cash flow on a fixed rate mortgage so that you can always cover your expenses as long as the property is rented. The other cool thing about this is that even if the market does drop, home prices are going to drop pretty significantly, but rents are actually going to stay the same or may even increase. In the last recession, we actually saw rents increase just slightly because there was a lot of people that ended up having to go through foreclosure or do a short sale on their home, and they then entered the rental market, which caused rental prices to actually climb as home prices were dropping. And last but not least, guys, of course, the value of your home really only matters if you have to sell it. Of course, whether we're talking about real estate or we're talking about stocks, these things are going to go up and down in value, but that really only matters if you actually sell the property. You could buy a property today and it could be worth double what you paid for in a couple of years, but that really doesn't mean anything until you sell. Same thing when the market goes down. You could have a property that was $300,000 when you bought it, and now it might only be worth $200,000, but that's okay. You might have a mortgage that's more than that. As long as you're cash flowing on that property and you don't put yourself in a situation where you have to sell the home, you're going to be okay. You can just hold on to it until the market turns around. And when the market turns around, you can then capitalize on what equity you do have. And believe me, guys, if the market doesn't turn around, if real estate never goes back up in value, you're going to have bigger problems to worry about. Last but not least here, guys, if you're buying a home for yourself, I also recommend checking out house hacking. If you're not familiar with house hacking, I've actually got a video that I'll put a link to right here where you can go and check out what house hacking is. And this is basically where you buy a home and you rent out a part of it to help cover some of your mortgage each month. You could do something like this with a duplex, or maybe something with a mother-in-law apartment or an accessory dwelling unit, or you could even just get a couple of roommates to help you cover the cost. So that wraps up this video, guys. I hope you enjoyed what you heard here. I hope this gave you some clarification on what I think you should do, whether the economy is booming or whether it's in a recession. Again, if you would, click the like button below on the video, subscribe to the channel, and drop a comment in the comment section below. I'd love to hear from you. And until next time.